Well, BofA's Global Fund Manager Survey is in. The top line, bonds have more fun. But there's a lot more to it than that. On policy, it sees 76% saying the Fed hiking cycle is over. On macro, it shows investors expecting weaker global growth. So let's get the full breakdown with Yahoo Finance's Josh Schafer. Josh, what are the charts saying to us right now?
Yeah, Brad, so obviously you noted off the top there, bonds really stick out here, and I want to just point out a couple charts that we have. So investors are now the most overweight on bonds that we've seen since the great financial crisis. You can see there we've really only seen investors be overweight on bonds a couple times over the last decade. But this chart just sticks out to me because what have we been talking about a lot over the last month and a half, 2 months now? We've been talking about bond yields rising, right? And at what point can bonds actually catch a bid as those yields pick up? It seems like that moment might start to be right now, and people are starting to come to the table and say, you know what, close to a 5% yield on the 10-year maybe isn't so bad. Above a 5% yield on that 30-year for a little bit wasn't too bad, and people actually turning and starting to be overweight and buy bonds, which we just clearly had not seen over the past couple of months.
When we talk about the sentiment right now towards equities, there was also something notable within this report in terms of the optimism that we're starting to see from Wall Street, from investors, in terms of the direction that we could see stocks go in here going forward.
Yeah, investors turning positive on equities. They're the most positive they've been since April of 2022. And really, sometimes you can see this as two ways, right? There's the investors are positive on equities, which can be a good thing. Obviously, it's a good sign, but then there are also sort of the inverse indicators that people point to where if investors are now positive on equities, maybe that actually means it's time to sell, right? Which there are always indicators that say that. But I think overall, the takeaway for me from this survey, when you look at the next chart that I brought with us here, is the conviction that the Fed is done and people are ready to turn more bullish on equities. They think yields are going to fall. They think inflation is going to come down. And just sort of the sentiment we've seen in the market expressed in this survey, the sentiment we've seen in the last 2 weeks, and the sentiment we're seeing.
It's like Max Kettner just said. He called it the Goldilocks setup, and I'm just surprised to see this. Just given you dig into this inflation report today, I think prices remain high, and just amazing that the Fed's just going to potentially cut rates in June. I can't wrap my head around that.
Yeah, but I think it was just the fact that the trend stayed intact, right? We are still seeing some disinflationary pressures across the board, not across the board, but in some particular aspects of this in terms of where we are seeing some pressure, I guess, start to alleviate specifically. Obviously, in energy, we did see also some relief when it comes to auto sales, what we're seeing there, auto prices, I should say. But in terms of what this means for the Fed, I also think that the Fed obviously has an extremely tough job right now because they don't want to be too dovish or signal anything in terms of investors interpreting them too dovish. They have to remain hawkish in terms of their rhetoric, but they also got to walk that fine line and make sure that they don't go too far, and then the potential repercussions that we've been talking to with a couple of our chief economists this morning and also strategists just in terms of what that could mean then over the next several months.
Yeah, and those indexes that did see declines, lodging away from home. So all of those accommodations companies that we've been speaking to, you spoke to Marriott CEO Anthony Capuano at Yahoo Finance Invest just last week. Lodging away from home, that's involved in that. Used cars and trucks, you got to finance one of those purchases. You think about communication, we're listening for any signs of delinquency among consumers as well. And then lastly here, airline fares, which CEO Ed Bastian just told us last week that they're already starting to see that the pent-up revenge travel has clearly already peaked and is behind us. So now what does normalization look like going forward from here?
I don't know. We all got to try to figure that out. What does normalization look like? I don't know. I don't think anyone knows. That is the great question. All right, Josh, thanks so much for joining us here.